Hello and welcome. You're watching BQ Prime. I am Agam Vakil, and we are taking stock of what's happening with ITD Cementation. This stock has had a tremendous run, in fact, gaining well over 120% in just the last, few months. We have, in fact, seen such a surge that it's now become one of the top movers on several benchmark indices, specifically in the small cap space. At the moment, this infrastructure company is doing very well because of the kind of order flows it is seeing and a significant uptick in terms of execution as well. But to take us through what has happened over the last few quarters, as well as what we can expect going forward, we're in conversation with the management, Mr. Prasad Patwardhan, who is also the CFO of the company. Mr. Patwardhan, good afternoon, and thank you so much for joining in. Let's start by taking a look at your latest order, which of course comes from Andhra Pradesh. And please correct me if I'm wrong. This is for the civil and hydromechanical works for 500 megawatt hydropower project. Can you take us through this specific order? What does that mean for your overall order book? And how much of your order book are you expected to execute in the balance half of this financial year?
Good afternoon, Agam, and thank you for having me on your show. So you're right, we just announced this order that we received yesterday. The order size is about 1,000 crores and we have to execute it in a little under 3 years. So with this order now, our order book today stands at about 23,000 crores. And the 23,000 crore order backlog will get executed in about 3.5 years. So in the first 6 months of this year, we did a top line of about 3,450 crores. And I think we should end the year somewhere around 7,500 crores or maybe a little bit more than that. So that's where we are in this year.
So from my understanding, you had guided for a revenue target of around 7,000 odd crores for the entire financial year. I reckon that since you're saying 7,500 crores, it should not be too challenging. Would you want to revise that guidance, or you just want to stick with it and then in fact outperform? And also in terms of your EBITDA margins, so if you could just confirm, the 10%, would you still be with those numbers at the moment?
Well, we have already, revised our guidance from 7,000 crores to 7,500 plus. So now we'll see how things progress in this quarter and the last quarter. And the actual numbers will be out by then. So that will give us a good idea of where we are in this year.
Right.
As far as our margins are concerned, we have seen steady improvement in our margins. While we haven't guided 10% margins for the whole year, I think for Q3 or Q4, we should be thereabouts. If not for the whole year, definitely for the quarter that we report the numbers for. And going forward, we are hopeful of further improvement in our margins as all these new orders start getting executed and start contributing to our top line and bottom line.
Right. My next question is to do with the kind of projects that you guys are getting orders in. At the moment, where will the focus be? In what segments will the focus be when it comes to execution in the second half of this financial year?
Well, if you look at our order book today, about a third of our order book comprises of marine projects. About 23% is urban infrastructure and about 18% is roads. There's one large road project, highways project that we are executing in UP. So largely these 3 or 4 segments contribute to our order book. If you look at the order inflow during this year, we have received orders worth about 5,800 crores so far. There are a few smaller orders, but largely we have this 1,000 crore order that we announced yesterday. And there are a couple of other marine orders, large orders, worth about 4,000 crores, which we announced 2-3 months back. So typically we are seeing more orders coming through in the marine space, in the urban infrastructure space and hydro tunnels.
Right. So, if you could give us a ballpark figure or a ballpark idea about some of your largest segments. So you did mention marine, you mentioned urban infra, you mentioned roads. Where is it that you tend to have projects with a relatively larger duration, say over 3 years, and where is it that you may have durations which are perhaps shorter than 3 years?
Well, marine projects typically tend to be relatively of a shorter duration. Underground metro projects tend to be, 4.5 or 5 years also sometimes. So that is the band typically from 3 to maybe 4.5 years. But the average execution timeline of our order book would be around, a little over 3 years, maybe around 3.5 years or so.
Right. So a final question then, when it comes to your margins, and so lots been spoken about commodity costs, but there has also been a little bit of a moderation in input costs going forward. What is your reading here, and are we expected to see further decline in prices, whereby you may in fact benefit from margins?
Most of our projects that we have under execution today, they have escalation clauses. So typically, we are able to pass on any increase in the input costs under the contract. We are able to pass it on to our customer.
Right.
Of course, the pass through may not happen, on a like to like basis, because the contract has certain predefined formulae for the escalation, and the actual movement in the prices may not be in line with that. So largely, we are able to recover. Any increase in the material cost, but of course, any moderation in the material cost or any reduction in the rates of interest would certainly be helpful from our operations perspective.
All right. So I'm just going to add another question on debt at the moment.
Sure.
Where does that stand with respect to your equity, and are you comfortable with that level?
Well, we are comfortable with that level. Our gross debt is about 750 crores as of September. Our debt equity ratio is about 0.5 times or thereabouts.
Right.
So, we don't have too much debt on our balance sheet. We are pretty okay to go. And even if we need any further funding to execute these larger projects, we have the lines in place. So that's not a challenge. And our endeavor is to keep a lean balance sheet and not let the debt balloon too much.
All right, Mr. Patwardhan, we leave it at that. Thank you so much for joining us and taking us through the outlook for the company. We wish you the best for the future.
Thank you. Thank you, Hakan.